In this video, I'm going to talk about the IRS form W-4 is married filing jointly with kids. Now, I'm going to go over a few different scenarios, but to make it a little bit easier, in the description at the bottom, I'm going to put all the times that each section is so you can jump to whatever section that you want to go over really quickly. So the first thing I'm going to go over is married filing jointly with kids, the paper version, which I'm sure most of you want to see, but I urge you to watch the next section, which is the online version or the Online Estimator. And then I'm going to show you how to split up the W-4 tax withholdings if you and your spouse have a job or if you have two jobs. And then I'm going to show you how to split it up if you have different income levels. So if one income earner is higher than the other, what that looks like. And then last but certainly not least, I'm going to go over how your money is taxed so you can see how that works with these withholdings. And I think it's going to help you understand that if you save more, how that's going to affect your tax liability and possibly boost your refund and just in general, reduce your overall tax liability. But before we do all of this, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, Certified Financial Planner, helping you reach your financial goals. So we're going to jump into this in just a second. But before I do, if you need to print out the IRS Form W-4 for 2020, I'm going to leave a link in the description at the bottom. Or if you just need to print out a second one, you can just go ahead and click on that. You have all the time codes in the description that I just mentioned. So if you want to fast forward to a particular section or watch it again, you just click on the actual time coding of it and it'll jump right to that part of the video to make it as easy as possible. Now, I can't stress this enough. You should use the Online Estimator because it's as accurate as possible. And there's some big changes with the IRS Form W-4 for 2020. So let's go ahead and jump right into the paper version. So this is the page that you're going to print out and fill out. Now, the other pages that go along with it, the other 3 pages, so there's 4 pages total in the W-4, you can hold on to those. They're going to be more of worksheets, but this is the one that you're going to turn into your employer. So at the very top, you can see that this section at the top, I'm going to go ahead and highlight what's important. So what we can see here is we have first name, last name, your social security number, your address, your city or town, state, and zip. So I'm going to go ahead and fill that out so you can see just how it is done. So once you have that filled out, then you're going to go ahead and check off the second box, which is married filing jointly, because that's what we're doing in this video. So I'm going to go ahead and check that off. Now the next section says, complete steps 2 through 4 only if they apply to you. Only if they apply to you. So we're going to do step 2, which is multiple jobs or spouse or your spouse works. And we're going to have some options here. So we're going to have A, B, or C. So we can only do one of the following. The first one, which we're going to jump to in a minute, is going to be using the Online Estimator at irs.gov/W4APP for the most accurate withholdings. So you can see, it says it right there, the most accurate. And B says use the multiple jobs worksheet on page 3 and enter the results in steps 4C, which step 4C is below. So it's going to be right here, extra withholdings for roughly accurate withholdings. Or C, if there are only 2 jobs total, you may check this box. Do the same for the other form W-4. Now this one's only going to be if they're basically the same income. So let's say that you're earning $50,000 and your spouse earns $50,000 a year. You go ahead and check this box off and it can do the math for you. And that's super simple. So if you have very similar incomes, then check this box off and that's all you need to do. Now I'd encourage you to still do the online version, even if you have very similar incomes, and you could just check this box and be done with it. But if you want your withholdings to be as accurate as possible, and what I'm really saying is if you want the biggest paycheck possible, fill it out correctly so it withholds the least amount. That is really the name of this game, to withhold the least amount, get the biggest paycheck possible. If you don't take the little extra step to make sure it's as accurate as possible, you could end up owing money or getting a huge refund back at the end of the year, which really just means that you could have gotten a bigger paycheck today. So in either one of those instances, you would have wanted to go back to make sure it is as accurate as possible. So let's go ahead and jump to the multiple jobs worksheet on page 3. So here's the multiple jobs worksheets. Now for this walkthrough, I'm going to do 2 jobs, which is going to be number 1. If you have 2 jobs and you're married filing jointly and you and your spouse each have 1 job, find the amount on page 4 and then put it in line 1. So I'm going to go ahead and pull up page 4. So page 4 looks complicated, but it's not really. So don't get overwhelmed. All you need to do is look at this first column, and this is the higher paying job. So you look at the range, and let's say that we're earning $50,000. So 50,000 is right here. If we go over and find the lower paying job, and just for this example, we're going to say $50,000 too. If we drop down here where it meets, that's 4,570. So we're going to go ahead and write down 4,570. So we come back to the 2 jobs worksheet and we're going to write that down, 4,570. Now, number 2 is for 3 jobs. So we're only doing 2 jobs. So we're going to skip number 2. We're going to drop down to number 3, enter the number of pay periods per week for the highest paying job. So I'm going to say that we're going to get paid twice a month. So that's going to be 24 payments per year. Then we're going to do some simple math. So we're going to take $4,570 and divide that by 24. That's 190.41. So I'm going to write 190. So we'll jump back to the first page, and right here for 4C, which is the extra withholdings, we're going to go ahead and put 190. In this section right here, if you read it, it says complete steps 3 through 4B on Form W-4 for only one of these jobs. So, and this is also going to be for the highest paying. So steps right here, you can see that second line. Steps 3 through 4B on the Form W-4 for the highest paying job. So we're only putting the 190 on one of the W-4s, where your spouse's W-4, in our example, we both were making 50,000. Only on one of them are we going to put the 190 as the extra withholdings. On the other, we would not. Now, I would assume that if we didn't fill this section out the way we did, where we only checked off this box, it would make the adjustment because it would just say, okay, one spouse is making 50 and it's something similar. So we're going to assume the other one is also making 50, and then it's going to make that adjustment. But by checking off this box, it's going to do it for both spouses. So it's going to make some sort of adjustment. And that may or may not be 190 divided by 2, just because the way our tax system works. It really depends on your total tax liability and how that gets broken up. But they can kind of figure it out and make that adjustment. Otherwise, if you make different income levels, then you have to go to that worksheet for the paper version. Of course, the Online Estimator will do it for you, but that's how you do the paper version. Now, if we jump back to step 3, where we're claiming our dependents, in this example, I'm going to assume that we have 3 dependents. So that's step 3, claiming our dependents. And we're going to say that they're all under the age of 17. So that is very important because children under the age of 17 qualify for a $2,000 credit, whereas a dependent is $500. So if your child is 17 years or older and they're still a dependent, then it's only $500 as a credit. Where if they're 16 and under the age of 17, it's very important you get that right. Under 17, then it's multiplied by $2,000. So for this example, we're going to assume they're all under the age of 17, and that means we're going to put 6,000 here. And we have no dependents in this example, so we're going to put 6,000 right there, and that will be the adjustment for our credit. And for the paper version, all you'll need to do at that point is sign there, date there, and that is it. Then you can turn it in and you are done. Now I skipped over the deductions. We're taking the standard deduction. And if you have any other income that's listed right here, and they give you examples of income that's not necessarily taxable, so you can adjust your W-4 withholdings to account for some of the interest, dividends, or retirement income that you may be receiving. You can put it right there. That's going to make that adjustment. And any deductions, such as an IRA or something like that. If you're putting into a traditional IRA, not a Roth IRA, a traditional IRA, then you're going to need to further reduce your total income. And that's how it makes the adjustment, by reducing your overall taxable income. So that would be the deduction section. Now I breezed over that just to show the married filing jointly scenarios in this example, but check some of my other videos out if you wanted to get more in depth on the deductions, or if you have a particular question about anything on the IRS Form W-4, go ahead and put it in the comments below. So that's the paper version. I'm going to pull up the online version. We're going to go right into it. So I'll leave a link in the description at the bottom so you can go right to the Online Estimator. And if you scroll down, we're filling this out as married filing jointly. Can someone else claim you as a dependent on their tax return? That is a no. In this example, it's a no. If you're a dependent on someone else's tax return, then click off yes. But for this walkthrough, I'm just going to go and skip over that and go through no. The dependents, yes, that's where we want to check off yes. And we're going to choose 3 dependents just for this walkthrough. We're going to have 3, and then we're going to jump down to the income. We're going to say yes. Now I'm going to say I have a job. Whoops, I have a job. And my spouse has no job, just for this walkthrough. And I'm going to go right through it again so you can see how the adjustment makes if we both have jobs. So the pension, I'm going to say no, scroll down all the way to the bottom. Now, if you have any other of these sources of income, go ahead and check them off and you can enter them in later on. Demographics, same exact thing. If it applies to you, then check it off. I'm just going to show you what married filing jointly is so you can see exactly how the tax withholdings are split up. Not necessarily all the little differences from adjustments to deductions to should you take the standard deduction versus the itemized deductions, just what it looks like for married filing jointly with kids. So your job, income and withholdings, we're going to say yes. How frequently do you get paid? In the example we're running is twice a month. Of course, put whatever is appropriate for you. And we're going to say we started this on January 1st. Enter the total wages we expect to receive. Now, this is important that you get this right, that it is over a 12-month period. So let's say you start the job halfway through the year and you're earning $100,000 on an annual basis. Well, then it would only be half. So you'd have to put $50,000 because that's what it would be in that taxable year. So just make sure that you get that right, and you can do some simple math or your best guess if you have variable pay. Enter any bonuses. For this walkthrough, we're going to not enter in anything. You don't actually have to put 0 because it doesn't say required. So we're going to scroll down and I'm just going to make this up, what we're withholding, but this is where you would want to go to your last pay stub and see what was withheld, because that's what it's asking, because it's going to make that adjustment. Now, early in the year, we're in January right now. Earlier in the year, it's not going to make as much of a difference as if you had it incorrect for months and months and months, then it will become more inaccurate. So this is going to help make that adjustment to get you back on track to make sure you're withholding just the right amount and not too much or not too little. I want it just right. So we want to put in here whatever your last pay stub says, and it has to be the last pay stub, or it should be your last pay stub, because that is the year-to-date number that you're looking for on that last pay stub. So if you have an old one, it's not going to show you the right amount. It's just going to tell you what's withheld from that paycheck, but not necessarily year-to-date. So you want to make sure that it's year-to-date. So I'm just, again, making these numbers up just so we can show what it looks like. And year-to-date, I said 500. Last paycheck was 99, and that doesn't even make sense because we're only really in the early part of January. But again, just put it in there, just an example. So this next section, do you or will you contribute to a tax-deferred retirement plan such as a 401k? I'm going to choose no, but remember, if you put it in pre-tax, it's going to reduce your overall tax liability. So previously we said our income. Put whatever you're earning on your income before you put it into the 401k. This is where you can make that adjustment. So if you checked off yes, that's where you can make that adjustment, and it will adjust how much is withheld to make sure you get the right answer. So that's how you're going to do that. Same thing for the next section, the FSA, HSA, FSA, and the cafeteria plans. A lot of that stuff comes out pre-tax. So that's why they're separating it, and that's why it's on here, because if it's pre-tax, it's reducing your total taxable income. Next. For this walkthrough, we're not going to make any adjustments. Click next. We're going to take the standard deduction. If you didn't know, it's right there. It's $24,800 for 2020. And I'm going to explain further the standard deduction when we go through the actual tax calculation for your income, just to help you better understand the standard deduction and how it affects your tax liability. So this is really important because if you don't go to this section, the credits, and fill out that you have 3 or whatever, however many children that you have, if they are under the age of 17, you have to go to this section, because if you don't, it just puts them as dependents and it defaults to the 500, not the full 2,000. So I've seen this mistake a few times already, and we're only in the second week of January. So I put 3 because I have 3 kids. So I'm going to go ahead and go to the next section now. So you can see right there. And if you did have, let's say you had 2 that were under the age of 17, 1 was 18 years old, then you would flip it over, put 2, and then put 1 as over the age of 18 or 17, excuse me. In fact, if you just put the number 2 here, it's going to assume that the other one's just a dependent. So we're going to put 3 for there, and we're going to go to the results page. And the results page is our anticipated tax obligation is $2,632. But because of how much we withheld, our estimated overpayment is $145. Not a huge amount. So we're going to scroll down. And here's what's different about this online estimator than previous years, even on the online estimator, is you have this little slide bar now where you can actually adjust it to get a bigger refund. Really, you shouldn't be doing that. You shouldn't be trying to get a bigger refund. You should be trying to reduce your tax liability to get a bigger refund, but you shouldn't be proactively withholding more money just to get it back later on in the year. That doesn't make a whole lot of sense. There are way better strategies than doing that to save for your financial future. So anyways, that's what this slide bar is showing us here. So if we throw this down to 0, scroll down here, and we're going to get our answer. To enter 6,000, you can see it right there. Enter $6,411 for credits and other deductions to the annual holdings on line 3 of Form W-4. Don't even have to worry about that. Just click on this link, download pre-filled version, and scroll down. And you're going to see it's entered in right there. $6,411. That's pretty nice. Now remember, in this example, we only had one income earner. So we want to go ahead and make that adjustment so you can see what that looks like. So this is only one W-4. So if you and your spouse have a job, it's going to be a little different. So let's quickly go back to that. So I'm going to have to go through it again, but I'm going to zip through it. So I'm going to go married filing jointly. Can someone else claim as a dependent? No. Do you have dependents? Yes. Let's say 3. Yes, I have an income, 1 job. My spouse has 1 job, no pension. Scroll all the way to the bottom, click next. Yes, I'm going to have this job all year. We're going to say every 2 weeks. Now for this, I'm going to say that we're earning $50,000 and my spouse is going to earn $50,000. So is that next section that I talked about where we're going to say that we each earn, or we both have jobs and we're going to each earn $50,000. So then we can scroll down here and say the same thing for our spouse, or enter how much of withholdings we have so far, 500. Doesn't matter what we put here. The answer is going to be exactly, or the answer or the output is going to be the same. You're going to see what I'm talking about in just a second. My spouse is going to have the job all year, twice a month. Most recent pay stub, $50,000. Just say $100 bucks. Let's say 0 for that. That's the bonus. We don't need to put that in there. How much tax was withheld? $100. Let's say it was $50 from the last paycheck. No, next. Go to the adjustments, next. Take the standard, next. Okay, so remember I talked about this before. We still have to go to the child tax section or the credit section and make sure that we get all those kids under the age of 17. So the credit will be the maximum of 6,000, which is 2,000 multiplied by 3. Now look at that. Our anticipated tax obligation is exactly the same at $2,632. That's what it was before, because as a household, we're making the same amount. Everything is the same. We're just splitting up the income and how we're filling out these W-4s a little differently. So let's say that we bring this down to 0 again. And this time, since we have 2 jobs, it's going to split it up for us. So we don't even have to do the math to split anything up. Just click off the first one and see what it says. And it says put 1,602 in step 3. You can see it right there. That's it. Let's go back. So you don't even have to figure out how to split them up because they're going to split it up for you. Watch this. The adjustment there, the adjustment there. So on both of these, we're going to enter 602 because that's what it's saying right there. If you click on this link, we'll in a second, let me see if I can open it up to another tab. It kept messing up before. So I'm going to open it up in a second because it erases basically everything on my iPad when I do that. But if we look at it here, we can say that enter 6. So we can see here that says enter 1,602 for in section, what is that, section 3? Yep, section 3. So both of them are going to be the same here. You can see that it says it right there. So if I click on that and look at that, it's even telling us that to get your desired refund amount, you will need $43 withheld from each paycheck, which is $57 less than on your current tax withholdings. So it's telling you exactly what the adjustment is going to be. Same thing for the other spouse. And remember, that's based on the inputs that we put for the year-to-date withholdings. So as you get further into the year, these could be much different than what you're seeing here. So it really depends on your particular situation. So you could just click on each one of these W-4s and they'll populate or they'll pop up. And you scroll down, you can see it. It's right there, $1,602. Print it out, and that's all you need to do. So it's splitting it up for you. So now I'm going to zip through this part just to show you what it looks like if one income earner is higher than the other. So for this example, I'm going to go over an income earner with $65,000 where the other income earner is $35,000. So it adds up to $100,000. So you can get a very close example to see what the differences or the variation is going to look like. So married filing jointly, we're going to do the same scenario with 3 dependents, 3 children under the age of 17. So we're going to check off no, click off dependents as yes, 3 dependents, income, yes. Each spouse has 1 job. No on the pension. Check off whatever applies to you. Click off next. We're going to hold this job all year, every 2 weeks, or excuse me, twice a month is what I checked off. Total wages. So now I'm going to put in $65,000. No bonuses. Year to date, we'll say $500. Doesn't really matter. Of course, you want to get it accurate, but it doesn't matter for this walkthrough. I'm just showing you an example. So before I said, if you didn't watch it already, the 401k or the HSA and the FSAs, those are going to reduce your total taxable income. And you should put what you earn before your savings and all that other information because it's going to make that adjustment here. So if you do have a 401k, for example, if you're putting in $10,000 into your 401k, you'd still put in the 65 before, but put in the 10,000 here, and it will make that adjustment to only tax you on the 55,000. So jump down to your spouse, same exact thing, every 2 weeks. We're going to say we started, our last paycheck was on the 1st. And then we're earning, in this example, $35,000. So we have 65 for one, 35 for the other. And then we'll just say $100 and $50. Doesn't matter. No, just for this example, click off next, go to next step, taking the itemized, we're taking the standard deduction, $24,800, click next. We want make sure you go to those credits to get the child tax credit because it will mess up if you don't check that off. Scroll to the bottom, click next. You get the same result. Look at that. Still $6,232 is our anticipated tax obligation. The other 2 numbers just means that we have to make an adjustment for what we already put in there. And it's getting that adjustment from the amount that we withheld year to date. So you can see that I'm just throwing in numbers there and it's not accurate. So it has to make the adjustment to make it accurate. We'll scroll down. We don't want a refund because we want to get our money now. So now you can see that there are going to be 2 separate IRS form W-4s, one for the higher income earner and one for the lower income earner. And you can check the drop-down menu and you can see the difference that it's making. So on the one, the higher income earner, it's saying enter $2,760 for the credits and other reductions to annual withholdings on line 3. It's that same line 3 that we've been doing the whole time. And The other earner, the $35,000 earner, is only going to put $636 on line 3. And if you clicked on both of those W-4s, both of those links, it will pre-populate that information right for you. So this is really accurate, and it's making the adjustment so you're paying just the right amount. And that is the goal of what the IRS is trying to accomplish here. They don't want you to get a big refund, and they really don't want you to owe at the end of the year. They especially don't want you to owe because they want their money. Okay, so now I'm going to go over how it's all taxed. So this might help you a little bit to understand how your taxes work, the standard deduction bakes in there, and also those child tax credits that we talked about previously. So for this example, we're going to use the same exact example, and it's going to be for taxes for 2020. So married filing jointly, that's going to be a standard deduction of $24,800. So we're going to say that's the standard deduction, SD. We have 3 kids. The example is exactly the same. So that means each child that's under the age of 17 is going to be a $2,000 tax credit. That means each dollar that you owe in taxes is going to be reduced by this credit up to $2,000. Multiply that by 3, which is $6,000 in tax credits. So the first thing that you have to understand is $100,000 gets reduced by the standard deduction, because we're going to take the standard deduction. So we want to subtract $24,800 from our $100,000, which is going to leave us with $75,200. So this is actually the amount that we're going to be taxed on, the $75,200. Assuming we're not saving anything else, there's no other deductions or anything else. So think about if you stacked all your dollars up, your $100,000. We're going to stack them all up for a minute. And down here we have $0. And up here, we're going to have our $100,000. So 100,000. Now we need to look at how this is going to be taxed. Well, we know the first $24,800 is not taxed. So we're going to put that line right there. $24,800. That's our standard deduction, which is at 0%. So that means we're going to pay 0. No taxes on the first $24,800. Now we have to look at our tax brackets. And here's a quick printout of our tax brackets. And for married filing jointly, now this is for 2020. So the first bracket is from 0 to $19,750, and that's at 10%. So the first $19,750 of taxable income is at 10%. So what we're going to do then is go $19,750 plus the $24,800, which means that the next $19,750 is going to be at 10%. So that brings us up to $44,550. And that difference right there is the $19,750, which is at 10%. So that means that we're going to pay $1,975, which is 10% of the $19,750. Now, the next bracket that we're in, and we'll bring back those brackets that we're looking at, is from $19,750 up until $80,250. That's at 12%. Well, notice that we don't have that much to go. So going from our $44,550 up to the 100, that's only an additional $55,450. And that is at 12%, which is $6,654. So in reality, if you look at this so far, if you had just looked at your tax bracket and jumped right to where 100,000 lands, that's at 22%. But notice when we include the standard deduction, you're never taxed at 22%. So it really depends on your total tax situation. So if someone says, I earn $100,000, you look at that and say, oh, you must be in the 22% tax bracket. That is not true. You're not paying 22% on any single dollar if you make 100 grand and you're married filing jointly. So now let's add that all up. So we're going to add this number, and this is actually, and obviously our zero, which is going to give us our total tax liability, which is $8,629. But remember before I said there was a tax credit of $6,000. So we're going to subtract that amount from our total tax liability, and that's going to give us $2,629. So this number is almost exactly the same as the online calculator, the online estimator put out at $600, and I believe it was $2,632. So there's obviously a rounding error in there somewhere. But this is our total tax liability. So now we can look and figure out how much we could save by putting money into our retirement plan pre-tax. So if it's a traditional 401k or a traditional IRA, it's going to be at 12%. Because all the $55,450 is all at 12%. So if we put in, say, $6,000 into our traditional IRA or even our 401k, really, it's not, we're going to feel that we're going to be paying $6,000. It's 6,000 multiplied by 0.12, which is 12%, which is $720. So 12% is $720. So if we put in an additional $6,000 into our retirement plans, it will reduce our total tax liability by $720. Now, if we were getting a refund, then this would be added to the refund. So if you went in and put an additional dollars into your traditional IRA at the end of the year, that means it would bump up the refund by $720. Now, of course, you have to have the $6,000 in order to get the tax benefit, but that is how it works, and that is how you calculate your taxable situation. So you can see that no matter how you do the W-4, your tax liability depends on your actual tax situation, not how you fill out the IRS form W-4. So you can see from going through those scenarios that the way that you fill out the IRS form W-4 doesn't affect how much you're going to end up owing the IRS. It just affects how much withholdings comes out of your paychecks. So you want to make sure that it's as accurate as possible. And if you want to reduce your total tax liability, that's where retirement plans come in to reduce the amount that your taxable income is on. So traditional IRAs, traditional 401ks, that's going to reduce your total tax liability. Now, putting into a Roth IRA, where there's a huge benefit because those dollars are going to grow tax deferred and tax free, they don't reduce your total tax liability in the year you make those contributions. So there's a huge difference there. So if you are close to one of those tax brackets and you want to get into the bottom bracket or the one right below it, then putting more money into those retirement plans will get you below that. Now, in our example, we were really far from the next tax bracket. So every dollar was going to be at 12%. But had we earned a little bit more money and we're in that 22% tax bracket, that would have been an even bigger benefit to put more money into your retirement plan. So it's really important that you get your W-4 as accurate as possible, but looking at your overall taxable situation will really help you control your tax liability overall and reduce it as much as possible. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.